Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. Alright, we can talk about these delivery numbers then. Q2 is now in the past. We just need to spend this month discovering the actual damage. Then we can all move on to continual record-breaking quarters again. You've obviously all seen the numbers. We ended up with 15% fewer vehicles produced this quarter over the last. Given everything we just went through in Q2, to only be down 15% doesn't seem too bad. Sure, deliveries were down 20%, but only due to the discrepancy between deliveries and production. But remember, as Tesla is supply constrained, production is the only figure we need to really care about in judging Tesla's progress. There still doesn't appear to be any great progress on the S, or more likely X line yet. Those cars really are quite complex, with deliveries only up 2,000 this quarter, to a total of 16,000. This should really have been around 25,000 by now. These models carry a lot of profit too, obviously. However, that is starting to look relatively smaller these days, as production is increasing so much for the other vehicles. I've said this before, but just to reiterate, this Q2 is not an important quarter. It does not provide an accurate portrayal of the trajectory this company is headed. We know that, but does the rest of the market? Or does it even matter? Perhaps it's more of a concern of how the media decide to spin it. No matter what, they were always going to have a losing quarter-over-quarter figure to play with. How brutal will they be with the stock? This was a quarter we all had to bear, and on top of some major macro issues and some Elon activities, the stock is down and hurting. Even now, still, we're sub $700. Sub 700 still seems like an exceptionally low price for this stock. But so many people who likely know a lot less about the stock than you, well, they're saying it's going to 500. Therefore, it might make you a little hesitant too. You don't want to buy some more stock and then risk it going down to 500. Sure, Tesla can drop to 500, and Apple can drop to 100, and Amazon can drop to 80. In fact, if Tesla did drop to 500, then that would probably be around where Amazon and Apple would also be sitting. Why? Because for Tesla to drop to 500, it would have to be something that affected the broad market, some macro activity. Currently, there is no reason for Tesla to drop that low relative to the rest of the market. Tesla are on top of all the issues they're facing and making some great progress. So just be careful listening to unqualified opinions on Tesla and letting them sway your opinion. In my opinion and experience, the ones who are most qualified and know the most about Tesla seem to already have invested in Tesla. They aren't sitting on the sidelines hoping for $500. Now, although this deliveries figure was around what the street expected, the more recent expectations had actually dropped significantly to more like around 240,000 or so. They are referring to deliveries, of course, but in their minds, I think there is little difference between deliveries and production. We were close to 260,000 units produced, remember? In other words, Tesla kind of beat expectations by 20,000 units. I think Dan Ives said the line was drawn in the sand at 250,000. Higher than that would be good, lower would be bad. Well, we are higher than that, even with deliveries. I also agree with him on this. I think this was a positive result. Especially if Tesla had taken some from inventory instead of added to inventory, we would have broken 260,000 deliveries. And Tesla were really trying to push deliveries at the end of the quarter too. In fact, in full force, which might make you think that there was an extra push in production towards the end of the quarter, especially given they couldn't deliver all vehicles in time. We're being told that June was Tesla's best month ever in production, and it sounds like Shanghai was running well, only to have to endure another shutdown for the Model Y now, albeit temporarily, and back with extra upgraded vengeance on the line. Hearing it likely that the Model Y Shanghai is going to be approaching 2,000 units a day. I don't know how many of you recall me saying this the end of last year, that we were hearing reports of that line at run rates as fast as 1,600 a day, and rumours of potential 2,000. It sounded unfathomable back then, and many of you thought it was unbelievable. Well, reflect back as to how unbelievable that felt, and as to what it would have meant to the future success of the company. Well, Tesla have cracked it, but we have been under so much turmoil, we haven't had enough time to stop and really appreciate this insane run rate we're at now, and what it also means for future capacities of future factories. That's right. I promise you, the reason for this run rate is not because Chinese workers work harder, it's because Tesla engineers are great with robotics. These run rates will be seen in all factories over time, and then some. This is of course just the Model Y line, which is going to be at twice the run rate of Tesla's Model 3 line in Shanghai. I think that has been somewhat neglected, likely due to the opportunity cost of a battery. Place said battery in a Model 3 with $10,000 profit, or place it in a Model Y with $15,000 profit. Every Model 3 sold has an opportunity cost of $5,000 additional profit in a Model Y. hence why Tesla are expanding the Model Y factory first. The Model Y is just an incredibly popular vehicle, in case you couldn't tell. And as some of you know, I'm also back to doing short-term options trading. I made a bet on this quarter being better than expected. I have an option that expires at the end of this month. I got to cover deliveries and earnings with this option, and it cost me about $30 a share, but I'm aiming to sell it for about $100. This is my high risk fund, which is a bit of a do or die account. It's really more for fun, don't read into it too much. I think I just needed something a little extra to entertain me during these times. My target is to eventually afford 2 more LEAP contracts from that account, or lose it all. I was hoping that we could have seen 1 million deliveries on the back half of this year, but I think that will require several rabbits out of several hats from Berlin and Texas now. We have Texas ramping with 2170 sales. That was a bit of an oversight there by Tesla, which I'm somewhat conflicted with. On one hand, they were so confident about the 4680 ramp, they didn't bother having a 2170 backup. On the other hand, they've barely produced any 4680 vehicles. I can't see them getting to volume production with 2170 sales though, perhaps halfway there at best. I just don't know how they could get that quantity of sales. China will be doing well in Q3, but we do have some downtime. Although the full shutdown is only a few days, there will be some additional line downtime on top of that, but should be super strong once back up. Then it's really going to come down to the 4680 ramp up for Q3 and Q4. Oh, and next year and the year after, a lot of this company comes down to 4680 sales. And that is where most of our focus will be for the rest of the year. Any 4680 progress is headline news for us. It's also what I care about the most before I reevaluate my investment strategy. Yes, my investment strategy, not trading strategy. I think the 4680 sales will become the core of this company for some time. Therefore, that is the actual product we are investing in for the future growth of this company. Of course, not to be confused with Tesla's actual product, the machine that makes the machine. All in all, delivery numbers really were about what the community expected. No surprises either way. And I feel that these days, no bad surprises is hopefully good news. As long as the economy is about where it is now, then I'm hoping for a little push of about 3 to 5% when the market opens again on Tuesday. And I would likely expect an overall upward trend for the rest of the month, heading towards the financial results. Possibly even reaching $800, depending on the financials. And of course the macros. North of $800 is a much more comfortable stock price to be sitting around, and in my opinion is probably where the stock price should actually be if Tesla only had to deal with macros this quarter, but the other events will soon be forgotten and no longer reflected in the stock price. We should get the China numbers shortly too, and then I can get into the financials, of which my current thoughts are it won't be as brutal as people suspect, due to us already working out the estimated loss of the new factories. Anyway, given what Tesla were facing this quarter, we should really appreciate how hard a job they did in getting this many produced still. Let me know what your thoughts are about these delivery numbers and how it might also affect the stock. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.